And welcome to your Daily 5. This is Mary Ellen McGonagle, and for those not familiar, I'm the founder and president of MEM Investment Research, and it was after many years of experience both on and with Wall Street that I founded my own firm to help self-directed investors outperform the markets. And my work is based upon my 15 years with William O'Neill and Company, where I traveled the globe teaching portfolio managers and analysts the O'Neill methodology that is all about uncovering these fast-moving stocks just before they take off. I'm also the founder of top-performing MEM Edge Report. Please take a minute and go ahead to my website, meminvestmentresearch.com. You can uncover more. I'll share with you my top winning stocks year to date and also have a special offer for my bi-weekly report. Let's get started today. I'm going to be sharing with you some of the best practices for helping you spot stocks that have reversed their downtrends. The moves out of that can be quite explosive. I know with my work, I've been able to uncover oil stocks over the last 2 months, as well as a number of financial stocks and other cyclicals that are just now starting to turn. In this episode, I'm going to be talking more about healthcare stocks that are reversing their downtrend and what characteristics can give you the confidence to know that that downtrend reversal is in fact on its way. Another area I'm going to talk to you about is one stock that's not quite ready for prime time, but I urge you to put it on your radar. It is poised to reverse its downtrend. So let's talk about some of the considerations for successful downtrend reversals. The first is we're going to take a look at those stocks and how they're behaving as they move up toward their simple moving averages. We're also going to pay close attention to volume characteristics. We want high volume that's going to give us that confidence that that downtrend has reversed. And then also, ideally, you want positive news that is in conjunction with that reversal, news that could propel the stock higher because the growth prospects are improved. Also, the industry group being in favor is another catalyst, another item that can help. So with that in mind, I'm going to share with you an example from my MEM Edge report. This is Co-America, CAM. It is a banking stock that we put onto our high conviction list back in the beginning and actually the end of October. A couple of characteristics here that really gave us the conviction. Number one is the stock price broke above each of these key simple moving averages. I have a 10, 21, 50, and 200-day simple moving average. In addition, at that same time, the RSI was trending positively, as was the MACD. And if you were to look at KRE, the banking index, you'll see similarly bullish characteristics. However, that index had not quite broken above. CMA has since delivered 36.5% return, still on our list, and that's 160% better than the S&P 500 during this same period. Moving along to a current chart of biotech. I talked about healthcare stocks coming into their own, in particular biotechnology, IBB ETF is with the Nasdaq. But what I want to point out here is this on this monthly chart, this very lengthy 5-year base breakout. We do have positive momentum indicators with the RSI and the MACD. The longer your base breakout historically, the longer your advance out of that base. We simply need to only go back to this beginning of 2012 when biotechs at that time went into a 4-year uptrend. A lot of dynamics taking place currently that are propelling biotech stocks higher. So let's look at some potential turnarounds. Our first stock is Amgen. We're looking at a daily price chart. The stock has really waffled and suffered here during the period mid-year last year into the beginning of this year. But take a look. The stock's price has broken above these shorter-term simple moving average. We're getting some nice volume characteristics. The RSI and the MACD are both positive, and the company is making great progress with one of their many products that is devoted to treatment for lung cancer. The stock also reported an increase in their dividend payout to 3% back in this period, bullish as it relates to the company's financials. Let's move on. Our next candidate here is Gilead, GILD, another daily price chart. Very significant downtrend. Again, this is going even earlier into last year. And at the beginning of this year, we see the first moves as far as this stock breaking back above these shorter term simple moving averages. We also have this secondary golden cross, this shorter term moving average up above that longer term. And we can see here that the stock is finding current resistance at this 200-day simple moving average. A nice break above that would give me the confidence to put money to work here, as the stock would clearly be headed higher. The stock did receive an upgrade today from Bank of America related to their breast cancer drug. Let's take a look at the next candidate here. It is Regeneron, REGN, a big winner in the beginning phases of the pandemic due to their cocktail that was designed to treat COVID-19, has since fallen out of bed. But take a look. More recently, we're seeing the stock potentially reverse this downtrend as it breaks above these shorter term simple moving averages. Your RSI is positive. Your MACD just creeping up here into positive territory. We're getting nice volume characteristics here. The stock did sign a contract last week with the U.S. government for $2.6 billion more in the way of COVID-19, what are called cocktails or treatments for COVID-19. So there's that positive news. Next up is Seagen, SGEN, and this gap up here is due to news that Merck has infused or will be infusing a total of $4.2 billion into the company. They're partnering with Merck on many projects regarding individual drugs. The stock did fall out of bed upon releasing earnings back here in November. And since then, it did have this earlier downtrend reversal attempt. However, it did fail. The stock pulled back to this upward trending 200-day simple moving average. And now more recently, the stock has broken back above these simple moving averages. Your RSI is positive and your MACD is poised to turn positive. This is another stock that received an upgrade with a price target as high as $215. Last up is a stock that is not in the biotech space, but one that I would say put on your radar screen. This is FedEx. We're looking at a daily price chart, and it had been a big winner out of the pandemic as online sales have expanded greatly. Since then, we can see that it has been under distribution and in a very confirmed downtrend. What I would need to see in order for FDX to be potentially reversing this downtrend is a break back above this pink 21-day and then back above this 50-day simple moving average. We're also going to need more work on these momentum indicators. We would like the RSI to be up here above 50 and trending upward, and then that MACD upon having that black line cross up through the red, ideally a break above that net neutral zero. But we can see the stock historically has the ability to trade to great heights. So go ahead and put this on your alert, and when these three items trigger, you can put money to work. That's it for your Daily 5. Again, please visit my website, meminvestmentresearch.com, and take advantage of that special offer for my newsletter. In addition to getting specific stock buy ideas, you'll also get insights into the broader markets as well as various sectors. Again, all with an eye toward giving you confidence so you can outperform the broader markets.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.